The Adani Saga continues. The Indian conglomerate extends its losses triggered by a short sellers report published last month. In recent days, the allegations against Adani Group have become a concern at the national level, including Prime Minister Modi's office. And in this episode of the Adani Saga, we turn our attention to India's market regulator, the Securities and Exchange Board of India, SEBI. SEBI is set to brief the federal government on its investigation into Adani Group's share sale. This move comes at a time when the regulator's laws are also being inspected by the nation's top court. The turmoil within the Indian conglomerate started with a short seller's report last month, and its impact can still be felt today as shares in Adani Group's listed companies have continued to drop, leading to a loss of more than $100 billion in market value. The allegations made against the company include improper use of offshore tax havens and stock manipulation, which Adani Group has firmly denied. The situation has caused widespread concern in India with protests in parliament and calls for an investigation. It has also led to downgrades of some Adani units, and it casts a shadow over the company's capital-raising plans. SEBI has been conducting a probe into the group's market route, looking into trade patterns and any potential irregularities. SEBI's board will update Finance Ministry officials on its investigation on February 15th, according to anonymous sources. Meanwhile, India's Supreme Court is set to resume its hearing on public interest petitions that raise concerns about steep investor losses sparked by Hindenburg's report. The court has asked SEBI to explain its regulatory frameworks and how such losses can be prevented in the future. The Adani Saga continues to unfold, and now the spotlight is on India's market regulator SEBI as it prepares to brief the government on its investigation. Stay tuned for further developments in this story. The biggest challenge to taking control of your personal finances, improving your investment returns, and building a better future is just getting started. This means getting organized, having a plan, and being disciplined. As Mark Twain once said, the secret to getting ahead is getting started. To break out the treadmill of slaving away each week only to have nothing left over, watching the savings you do have to get eroded away by inflation's vicious bite, or freeing yourself from the corporate grind requires that you master the conversion of time into value. To help you do this, we created a list of 4 simple steps to take control of your personal finances and life. You can download it for free by clicking the link in today's description. Alright, back to the news. The UK avoided a recession last year after the cost of living crisis hit the economy in December. According to the Office for National Statistics, GDP was unchanged in the fourth quarter after a 0.2% decline in the previous 3 months, meaning that the UK avoided a recession in 2022. Despite avoiding a technical recession, the UK is still the only G7 country that has yet to fully recover output lost during the pandemic. The UK economy ended 2022 on a slightly more positive note, not only avoiding a technical recession, but it is still expected to fall into a mild yet prolonged recession throughout this year, said chief economist at KPMG UK. The GDP figures have implications both for the Bank of England's monetary tightening and the Treasury's planning for the budget on March 15. Chief economist at the Institute of Directors stated that the bank may need to raise interest rates a little further to squeeze out inflation, and the government may find they have higher tax revenues at their disposal when they consider various options for the budget. In a sign of inflation that will concern the Bank of England, the total bill for wages and salaries in 2022 was up 7.4%, which was the biggest increase since 1999. Despite this, household spending rose 0.1% in the fourth quarter, suggesting that consumers are enduring the worst cost of living crisis in generations. Business investment also jumped 4.8% in the final 3 months of 2022, putting it back at a level not seen before the pandemic. For the whole of 2022, the UK economy grew 4%, which is slower than the 7.6% pace recorded in 2021, when the nation was recovering from pandemic lockdowns. Experts point out that despite avoiding a recession, the economy is still fragile and stagnating, which might cause suffering of ordinary families who will experience their living standards decrease significantly. That's it for today's news. Remember to subscribe to our daily newsletter, We Study Markets, by clicking the first link in the description below, and subscribe to our channel too. Thank you for watching.
He told Lilu and me that he wanted us to get together for lunch once a month. He basically pretty much instructed us that the two of you, I want the two of you to meet once a month for lunch.